Nobody's ready for what's coming. Europe just launched its first MiCA-compliant stablecoin backed by Kraken and Robinhood. Elon Musk just raised $10 billion for XAI. And Trump's threatening to unleash DOGE. Malaysia wants easier listings. The US is stuffing crypto amendments into a monster spending bill. And Ethereum? There's a new foundation gunning for a $10K ETH, no more playing nice. Meanwhile, the EU's gold standard regulation? Yeah, it's already showing cracks. Let's unpack the biggest crypto plays nobody's talking about yet. Story 1. Pakistan's Bitcoin mining dream blocked by IMF power play. Pakistan had a clear plan: turn wasted energy into digital gold. The country generates surplus electricity, especially during winter, but lacks consistent demand to absorb it. So the government proposed something bold: offer marginal cost electricity pricing, about $0.08 per kilowatt, to energy-intensive sectors like Bitcoin mining, data centers, and copper smelters. The goal? Boost demand, monetize excess power, and generate new revenue streams in a struggling economy. But the International Monetary Fund said no. The IMF blocked the plan, warning it could distort the energy market and worsen systemic inefficiencies. Translation: cheap power for crypto, not on our watch. All significant energy-related proposals must now be greenlit by the IMF, and Bitcoin mining didn't make the list. Here's the paradox. Pakistan has the energy. It needs the economic growth. But global financial institutions still get to decide what it can or can't do with its own electricity. This situation exposes a bigger issue, one that developing nations around the world are now facing. Will countries ever be truly free to tap into the decentralized economy without outside interference? Bitcoin was meant to offer sovereignty, but what happens when energy policy itself is no longer sovereign? Story 2. Web3 gaming levels up. Smedley raises $30.5 million for Shooter on Tezos. This isn't another indie NFT project, this is a serious AAA-backed gaming pivot. John Smedley, the mastermind behind EverQuest, PlanetSide, and a pioneer of MMO gaming, is back with his new venture, Distinct Possibility Studios. And they just raised $30.5 million to build Reaper Actual, a massively multiplayer open-world FPS, powered by Tezos Layer 2 Etherlink. What makes this project different? The focus isn't just on monetization, it's on actual gameplay. Web3 elements like skins, characters, and bases will be fully optional and tradable, not pay-to-win gimmicks. Etherlink was chosen not for hype, but because the devs aligned with a game-first philosophy. In Smedley's own words, "The game is the most important thing." This marks a critical turning point for blockchain gaming, where credibility, funding, and developer experience are finally coming together. So what's next? If Reaper Actual delivers, it could break the stigma around blockchain games and open the floodgates for real talent to enter the space, no buzzwords required. Story 3. Tether quietly takes over BitPay as USDC stumbles. In 2024, USDC was untouchable on BitPay. It handled 85% of all stablecoin transactions on the platform, dwarfing Tether's USDT. But 2025 tells a different story. New data shows a sharp reversal. USDC has dropped to 56% of BitPay transactions. USDT has risen to 43%, nearly quadrupling its previous share. What's causing this shift? Despite Circle's public debut, its regulatory clarity in Europe under MiCA, and backing from major institutions, users are gravitating to Tether. Here's why. USDT has better liquidity across global exchanges. It's simpler and faster to move, especially in emerging markets. Traders trust what works, not what's regulated. It's a brutal reality. Regulatory approval doesn't always mean market adoption. Tether may lack the same transparency standards, but in terms of functionality, it's winning the utility war. This trend could continue unless Circle adjusts its UX or global reach. Because as crypto matures, one thing becomes clear. The winner isn't the most compliant, it's the most used. Story 4. Ethereum Community Foundation declares war on mediocrity. Targets $10K ETH. Ethereum has always worn the badge of decentralization proudly, but there's one thing its core foundation has never directly chased: price. That just changed. Zach Cole, a veteran Ethereum core developer, just launched the Ethereum Community Foundation, ECF, a new organization with a clear, unapologetic mission: grow Ethereum. Raise ETH to $10,000. And they're not being subtle about it. In Cole's own words, ETH's price is a direct function of security. Let that sink in. He's making the case that a higher ETH price doesn't just benefit investors, it strengthens the protocol itself. Why? Because Ethereum's security is directly tied to ETH's market cap under proof of stake. The more valuable ETH becomes, the more expensive it is to attack the network. So what's the ECF doing differently? Funding key infrastructure projects that traditional grant programs avoid, backing initiatives that drive real-world ETH demand, publicly advocating for ETH as an economic asset, not just a fuel token. This is a philosophical shift in Ethereum's culture. For years, the Ethereum Foundation steered clear of price talk, viewing it as a distraction from tech innovation. Now, the gloves are off. And let's be honest, with Bitcoin being institutionalized and Solana surging in user activity, Ethereum needs a narrative reboot. The ECF is offering one bold, strategic, and unapologetically capitalist. Will it be enough to push ETH to $10K? That depends on whether Ethereum builders can align on value, not just vision. Story 5. MiCA's hidden flaws. Bitcoin Suisse legal chief raises the red flag. MiCA was supposed to bring clarity, a unified rulebook for crypto across the EU, a gold standard for regulation in the digital asset space. But not everyone is convinced it's working, at least not yet. At German Blockchain Week, Peter Merkel, General Counsel of Bitcoin Suisse, issued a clear warning. There's a lot to be done. And here's what he means. Stablecoin classification is still unclear. MiCA introduces new categories, but real-world assets evolve faster than regulators can categorize them. What qualifies as an e-money token versus an asset reference token? The lines are blurry. Foreign issuers are at a disadvantage. MiCA is strict. If you're outside the EU and trying to issue a stablecoin, even one that's compliant in the US or Asia, you'll likely be blocked without a local license. Germany, in particular, has begun enforcing hard. Regulation can't keep up with crypto innovation. DeFi protocols and cross-chain assets evolve faster than legislation can be drafted. Merkel warns that unless flexibility is built into MiCA, the framework risks becoming outdated before it's fully implemented. The takeaway? MiCA isn't bad, but it's not the silver bullet many expected. And as the EU pushes forward, other jurisdictions like the UAE, Hong Kong, or even Switzerland may become more attractive for innovation simply because they're faster to adapt. The future of crypto regulation will come down to this. Can lawmakers keep pace with developers? Because if they don't, capital and innovation will move elsewhere. The pressure is building from all sides: regulators, developers, even legacy banks. Bitcoin mining dreams get blocked. Ethereum wants $10K, gaming is going Web3, and stablecoin wars are just heating up. Are you watching the signs, or will you wake up too late? Let us know in the comments which story shocked you the most. And if you're still here, smash that like, subscribe, and get ready, because this market, it's just getting started.